Hello everyone. We are Team Enigma or Team E from BUS189. We will be discussing today about our company and how we are doing within the Glo-Bus simulation game. My name is Orlando, and my other teammates are Chris, Josh, Steven, and Patrick. Right now, I will be discussing about the metrics. So moving right along to net revenue. As you guys can see, our highest yet so far is year 7 for our net revenue, coming at $284 million, and our worst is year 10, which is $195 million, slightly below where we started with year 5. Nonetheless, our net revenue has been relatively decent, fluctuates up and down, but slightly. Moving right along to our earnings per share. We started off year 5 to year 6 to $3.25. Our highest yet is $3.68, and our lowest is this year, which is year 11 that we just completed, dropping down all the way to negative and 20 cents. Really bad, but we will discuss about that a little later on. And our ROE, or return on equity, at the moment is for year 11 is the worst yet, dropping down to the negatives to negative 1.4%. Our highest was in year 6, which was at 24.5%. Moving along to our stock prices. Although, again, our ROE and our earnings per share has dropped down to the negatives, our stock prices have stayed or remained within the positive. As you can see, year 7 was our highest, for our stock prices being at $54. And for year 11, which we just completed again, was our worst yet, dropping down to $15. Our credit rating has has been going up and down. We started with year 5 to year 6, going to an A minus. We maintained it from year 6 to year 8. However, from year 8 to year 9, as you guys can see the drop, there were some decisions that were made that affected our company substantially. We dropped from A minus to a B, and then from year 9 to year 11, as you can see, which is our worst yet for year 11, dropped all the way down to C plus. Now for our image rating, by far our highest was year 6, staying at an 80 for our image rating, and we have dropped from year 6 to year 10, which was our worst, all the way down to 63. And on year 11, we were actually able to raise it back up by 6, and now it's within 69 for our image rating.
Hi, this is Josh with Team Enigma, and I'm here to talk about the market segmentation and trends. As we look at our first screen, we can see the 4 different territories that we operate in. There's North America, Europe, Africa, Asia Pacific, and Latin America. And what we did here to just kind of understand the breakdown of the segmentation is listed 4 different categories of differences in entry-level markets and multi-feature markets for cameras. So the first category you can see under each of these markets is the pricing. We wanted to see how much does the pricing affect the purchasing decision that the customers will be making in each of these market segments. As you can see in the entry-level market, the pricing is of importance, and as well as in the multi-feature market, it is importance as well. So that kind of tells us that when we're going to push our product in the North American segment, we really need to be conscious of how much our product's going to cost to the end user. The second category that we're going to look at is quality. Typically in an entry-level market, it's going to be less of a concern because people are looking to pay a cheaper price for a more basic camera. And on the other hand, multi-feature markets are going to be more concerned with quality since they're paying a premium for their advanced devices. In North America, this is the case. The third category that we wanted to look at was advertising. We wanted to see how much an influence advertisement has on purchasing in entry-level markets and multi-feature markets. So looking at North America, we can see there's check marks in both of the importance fields. That means that advertising does play a big role in these customers' purchasing decisions. So as an overview of the North American market, we can see that price is a determining factor for the customer. Quality is going to depend on which market you're looking at as far as entry-level and multi-feature go. Advertisement is going to play a big decision-making factor on the customer, and tech support is also going to vary on which side of the market you're playing in. So now that you have a better understanding of how we're looking at the market segmentation in each of the regions, we can kind of go through and do a quick overview of each of the territories that we're marketing in. So let's take a quick look at Europe, Africa. The pricing and quality is going to be completely polarized in each of these markets. In the entry-level market, they're more concerned with price and less concerned with quality, whereas the multi-feature market, they're more concerned with quality versus price. In advertising, it's going to play a bigger role against the entry-level market, and it's going to play less of a role against the multi-feature market. Moving down to tech support, we can see that tech support does play a bigger role in the multi-feature market than it does in the entry level. And it is different than North America here, and I think it's because the Europe-Africa territory sees it more as a service bonus added into the price of the premium camera. Okay, so let's move to the Asia Pacific market. We're going to see here that price is important in both of these markets. Quality is also of importance. It's a difficult market to be in because you really have to embody that value in each and every sale that you have in both the entry level and multi-feature cameras. Looking at advertising, we can see that it's not of importance to either of the markets, and usually that's because of internet knowledge that people get before they make their purchasing decisions. Whereas advertisement, if it's not new to a customer, it's not going to have as much of an impact on the customer or the end user. And looking at tech support for them, it's going to be more important in the multi-feature market than it is the entry level. And I think it's going to be the similar situation as in Europe, where it's they're getting that service with the price of the premium camera. And finally, moving on to Latin America segment, we can see that price is a bigger concern than quality in the entry level market, and the multi-feature market thinks that the pricing is less important and the quality is more important. Advertising is not going to be a very big market determining factor for this segment, but tech support will be in the multi-feature market. It's getting that service for that premium price you're getting for the camera. So to look at things as a whole, we can see the entry-level cameras, and we can kind of see what the main concerns are, kind of from a percentage-based look at things. We can see that entry level is mainly concerned with pricing at 50%, 25% concerned with technical support, 25% concerned with advertising, and by average, it averages out to 0% are focused on quality. And if we look at the multifunction cameras, we can see that 33% of these users are focused on the tech support, 22% on price, 34% on quality, and 11% on advertising. Okay, so to shift gears and look at the trends, what we did here is we included the increasing areas for each of the territories and the decreasing areas as well. So things like technical support and advertising, when you see that those are increasing, that lets you know that to stay competitive in this market, we need to one-up our advertising. We need to one-up our tech support. In a decreasing market, as far as pricing goes in North America, we can see that we need to be concerned with having a competitive price, which is moving downwards. In any of the categories that you see that say varies are fluctuating markets that you're really going to have to pay more attention in, and don't really have a clear definitive line of which direction they're really heading in. So we can kind of go through and see Europe and Africa and kind of take a look at which direction each of their sales are going in, Asia Pacific, and finally we can look at Latin America. And this is just really good to kind of understand the markets as a whole, which direction they're going to head in. And like I said, how are you going to stay competitive in those markets? This is what we've been doing for Enigma. And, so far it's been a difficult ride, but we definitely have some plans in the work because we have this overview site of what we think the market's going to do next. And that's going to about wrap it up for our marketing segmentation and trends. Hope you have a better understanding of what we do here at Enigma and possibly learn a thing or two about how to stay competitive in the market. Thank you.
Our closest competition is the Heritage Corporation. Heritage Corporation seems to have the same strategy of mid-range product, mid-range price that we do. In years 5 through 8, we had run laps around Heritage in return on equity, the earnings per share, the stock price, and even the corporate image. It seemed like they would never really catch up, especially because they never really got a lot of market share. Heritage always seemed to stay around the 6 to 7% in North America, 12% in Latin America, 10% in Europe, and 10% in Asia as well. We believe they never really gained market share because they were never the lowest price camera, nor were they really the highest quality. Unfortunately, we suffered a bit from the same strategy, being the mid-price, mid-quality camera with high labor costs and mediocre sales. However, we did make some grave mistakes in year 9 that impacted how strong our competitive positioning was against Heritage. Our labor costs and warranty claim rate began to climb as our markup and profit began to decline. As our costs increased and profits decreased, Heritage profits began to soar, dramatically improving their return on equity and their earnings per share. Heritage had over 240% of our own profit after year 9, and 150% of our profit in year 10. Luckily, they began to shoot up their costs in year 11, sending them barely above break-even. Heritage does seem to have a renewed focus on producing a better quality camera at a lower price. And while this strategy is really nothing new from Heritage, they are doing a better job at keeping their costs low and their margin consistent. We see them as an up-and-comer in the market, but as long as we continue to maintain our costs, we will remain the better-run company.
At the beginning of the simulation, our strategy at Enigma was to provide a high-value camera for a reasonable price on both the entry-level and multi-featured cameras. We knew going into the simulation that we would not target the cost leader position, but rather find a niche in the market where we could charge slightly higher prices for a superior product. From this position, we could adjust to our competitors' moves and adapt to variations in the market. According to our strategy, our competitive advantage would come from a low production cost. As the simulation progresses, we assume that prices would become exponentially competitive. With lower manufacturing costs, we could charge less than our competitors, proportionate to camera quality. We felt it was important to reduce the number of outstanding shares as much as possible. With fewer shares on the open market, our earnings per share would be greater and our stock prices would climb. Because image rating is determined by a range of factors, we felt we could satisfy investors' expectations through a combination of product design, marketing, labor, and financial decisions. Implementing this strategy proved to be a complex undertaking. We determined that we could manufacture an entry-level camera with a PQ rating of 2 stars and a multi-feature camera with a PQ rating of 3 stars while still keeping prices at a level that achieved our operating profit target. Producing cameras in the mid-PQ range and charging slightly less than average prices gave us the flexibility to adjust to market conditions. To gain a competitive advantage in production costs, we decided that we would invest heavily in R&D. Every decision round we would invest a portion of our excess cash. By consistently investing in R&D, we could decrease our manufacturing costs and charge lower prices than our competitors while still gaining profit. Buying back shares was another critical component of our strategy. To reach our stock price and earning per share goal, we decided that we would buy back the maximum amount of shares every year to keep the number of shares outstanding to a minimum. The key to our image rating strategy was to leverage several sources. The bulk of our image ratings would come from marketing and labor compensation decisions. Our investment in tech support and our marketing promotions gave a significant image rating boost. One area we wanted to focus on was reducing warranty claims. To do this, we invested heavily in our workforce, which in turn raised our image rating drastically. We also planned on increasing image rating in small increments from our various product design and assembly inputs, as well as financial decisions such as declaring dividends and our stock buyback program.
Alright, so we're going to go and jump into talking about the reflections on what went right and what went wrong for the decisions that we made for our team. Firstly, on what went right for Team Enigma, seems like the cash in hand, despite the fact that we've fallen from position 1 in year 6 all the way down to 6th place in year 11. We've still had a positive cash in hand, and our revenue is still considerably fair or decent in comparison to some of the top performers, such as Company C, for example. They are at 3rd place. In year 11, they were able to obtain $293 million and $682,000, whereas we, being in 6th place, we were still able to obtain $220,555,000 for revenue, putting us still in the positive. However, we've noticed a lot of downfall that have put us from being in the top to close to the bottom. So therefore, next, I'm going to discuss about what went wrong for our team. So we're going to go into the market share, entry-level cameras, elaborate a little bit more on that, and also multi-feature cameras, and then doing some subjective reflections on what went wrong. Firstly, for our market share. Now, as you can see highlighted in the red, we dropped substantially within these market share. For North America specifically, which started out as our top market, we, based on the decisions that we made over the years through the simulation game, we've actually dropped from 25.1% down all the way to 16.7% to year 11, which is an 8.4 drop. Multi-features, as you can see throughout all the markets, it's all highlighted in red. We've lost either half or a little bit below or under half for each, such as for Europe and Africa. From year 6, for multi-feature, we were at 16.4%. Now we dropped all the way down to 9.8%, which is relatively 6.6% drop. Asia Pacific, same thing. We dropped roughly about a little bit over half. And Latin America, though it was our weakest market, we were still able to drop down about half, which entails that we are losing market share to other companies, and this is impacting our company greatly. It's very negative because this is eating out our market share, and we are dropping a lot of revenue based on this. Next, I'm going to discuss about our entry-level cameras. As you can see, based on this screenshot that I showed, this is based on year 8. However, this is occurring both year 9 and year 10. Our labor cost is still considered too high for our entry-level cameras. Warranty claims is also needing attention, as you can see over here. And then production cost per unit. In year 6, with a PQ rating of 2, we were at $83.54. Yet in year 11, we're 5 years after, we're still at a PQ rating of 2. Yet we've gone down, but we've only gone down about a little bit below $7, which in our case is still considerably really high for production cost per unit. Moving on to the multi-features cameras. As you can see, again, we're having really similar issues here to the entry-level cameras. And multi-features, although it's not shown here, we're having both labor costs is still considered too high for multi-features. Warranty claim rate in year 8 doesn't appear to have any issues. Nonetheless, in year 9 and year 10, we still see the red marks stating we need attention. Therefore, our claim rate is still considered too high. Production cost per unit, again, is really high for us. Although we pushed a lot of R&D in, it still seems like our production cost per unit is high. It thus making it very difficult for us to produce our cameras at a low cost. Now moving on to some subjective reflections. For our team Enigma, one of the issues that we have, or at least one of the wrong things that we've done, is we haven't strictly stayed with one strategy consistently throughout all the simulation years that we've had since year 6. We changed our PQ ratings and our prices based on the fluctuations of the market share and based on what other companies are doing. And I believe this is actually negatively impacting us because we are not following one strategy that works for us. And instead we switch back and forth, which is bad. We've lost a lot of market share as well, which cuts a lot of our revenue. And we're staying in the middle. So what I mean by staying in the middle is, up to this year, a lot of the other companies are either really high or really low. And for us, trying to stay in that position in the average or in the middle, it's basically a position that we don't want to be in because the markets are being stretched from high to low. And being in the middle, you're really not gaining any market share, nor are you gaining any revenue based on the companies. And again, our PAT compensation is too high, as you can tell based on the screenshot, and therefore we definitely need to take a look and figure out a solution to fix our PAT compensation. Therefore, for our future actions, some of the things that we will have to look into to get our company back up and running correctly, we will have to focus and try to follow one specific strategy, one that works, and build a strong market share through an average PQ rating, so that we at least have the market share the market percentage to sell our cameras in to make enough revenue. Offering also the lowest yet acceptable prices. Again, we're going with the low cost strategy here. Implement and invest substantially in advertisement. Since we are low in market share, we really need assistance in we will be promoting our cameras through advertisement to gain that buffer of having a low market share. And we will also focus on lowering our labor costs and our warranty claim rate. And this is it for our company. Thank you for your time. And Enigma